This is the third part of the video series on lease accounting brought to you by Eagle Finance Tutorials. In this part, we shall start to learn the accounting entries for leases. Accounting for leases can be broadly classified as for finance lease and operating lease. Within each of those, the lessor has a scheme of accounting entries to make, and so does the lessee. We shall first delve into finance lease accounting entries. In a finance lease, the lessee brings on his books of accounts the asset taken on lease and also records a liability towards that to the lessor. And the lessor similarly makes entries to remove the asset given on lease from his collection of assets and also records the receivables from the lessee. We shall first learn the accounting entries in the books of the lessor. The broad structure of entries look like this. The lessor makes entries at three stages of the lease: at the start of the lease, during the lease, and end of the lease. At the start of the lease, the lessor records entries to eliminate the asset given on lease from his books, records lease receivables, and also makes a holding account to park the unrecognized finance income. That is, the finance income which is going to accrue throughout the lease term. During the lease period, the lessor makes entries to record the receipt of lease payments and also recognizes finance income earned. This is when the actual revenue recognition takes place. At the end of the lease term, if the lessor gets to receive any payment for residual value of asset or any payment from the lessee towards the exercise of purchase option by him, then the entries are made for them. I would like to draw your focus to a key point. The lease receivables, when discounted by the lessor, he gets the present value of lease receivables, which is the same as the fair value of asset given on lease. Let's see this by an illustration. Consider in a lease, the fair value of asset leased out is rupees 1 lakh. Lease term 3 years and lease rentals rupees 40,211 a year. Interest rate on the lease 10%. With this, we know the total lease rentals receivable throughout the lease term rupees 40,211 times 3 years rupees 1,20,633. Lease rentals, when discounted, we get the present value of lease rentals as rupees 1 lakh. The fair value of asset given on lease. Let's work it out and see. As we start to discount the lease rentals, we make a table like this. Lease rentals 40,211 each year. We plot these on the table. As for the discounting factors, we pick up the present value table. On the table, we look up the column showing the factors for 10%, the rows showing the factors for years 1, 2, 3. These are the discounting factors at 10% for each of the years 1, 2 and 3. We plot them on the table. Next, we arrive at the present values for payments received each of the years. Finally, we add up the present values to arrive at the total of present values. You see, the present values of lease rentals is the value of asset leased out. Now, we shall pull out the picture we saw earlier. The total lease receivables are known as gross investment in lease. Their present values, which is also the value of leased asset, is the net investment in lease. Let's pick up an example of a lease with yearly lease rentals rupees 40,211, lease term 3 years and lessor's rate of interest 10%. Yes, this is the same set of data we discussed so far. Let's call this practice 1. We know what to do now. We have got to discount the lease rentals using the interest rate 10%. On discounting, we get the present values of lease payments. Of course, we know the present value for all these payments together. We just did it. It is rupees 1 lakh. Let's now visualize this. These are the total lease receivables. This is the total present value of the lease receivables, which is also the value of asset given on lease. The difference between the total lease receivables and the total of their present values is the finance income in the lease. We shall now make the accounting entries as the lessor would do on his books. We credit the asset given on lease by the fair value of the asset, that is, present value of total lease receivables. Next, we debit the lessee's account to record that we have got to receive the lease payments from the lessee. Finally, we credit the unearned finance income to park the total amount of finance income that is going to accrue throughout the lease term. This is the total of finance income that is not yet recognized as revenue. The entry looks like this. On the debit, instead of lessee, we can also use a common account titled as lease receivables. Similarly, on the credit, we called it as asset given on lease just to help you understand. We shall instead use the title net investment in lease, the term prescribed by the accounting standard. Again, on the debit, instead of lease receivables, we can also title the account as gross investment in lease, the term prescribed by the accounting standard. Please note, lease receivables or gross investment in lease are representative personal accounts. In reality, when a lessor makes lease accounting entries on his books, he would record the lease receivables with the personal account of the lessee as we first mentioned. Like for example, if the lessee's name is Rakesh, then the entry would go as Rakesh account debit with the total lease receivables from the lessee. The term called gross investment in lease would still be used by the lessor for disclosure on the balance sheet, similar to reporting sundry debtors on balance sheet, combining the debit balances of all the customers' accounts. In this example, the leased asset does not have a residual value. What if it had a residual value and it is guaranteed by the lessee or someone on his behalf? The amount guaranteed is rupees 15,000. Lease rental per year rupees 35,679. Let's consider this block as the total value of asset given on lease. Part of it is the economic usable value and part of it is residual value. Residual value is guaranteed by the lessee or someone on his behalf for rupees 15,000. Lease rentals rupees 35,679 a year times 3 years. Lease rentals and guaranteed residual value together make up the total lease receivables. We know what to do next. We shall calculate the present values. Present value of lease rentals. From the calculation table, we see the total of present values of lease rentals is rupees 88,728, rounded off to 88,730. Present value of residual value guaranteed. From the calculation table, we see the present value of GRV as rupees 11,270. We make the totals. The difference between the total lease receivables and their present values is the finance income. Now the entries. The entry looks like this. Let's make a quick comparison of the entries under practice 1 and 2. That is without residual value and with residual value guaranteed by the lessee or his group. Net investment is always the total of present values of lease receivables at the start of the lease, which is also the fair value of asset given on lease. Please note, as the lease term progresses, the balance on lease receivables keep changing as the lessee keeps making the lease payments. Similarly, the balance on unearned finance income keeps changing as the finance income gets recognized by every passing year. However, the net investment in lease account is credited at the start of the lease with the total present value of lease receivables at the start of the lease, and it does not change. In this instance, the guarantee for residual value is provided by the lessee or someone for him. What if the guarantee is provided by a third party? How would the entries be then? It is just the same way as when the guarantee is by the lessee. Let's make a quick comparison of the entries under different situations. Let's consider a situation where the leased asset has a residual value that is partly guaranteed and partly unguaranteed. Other terms are same. Consider this block as representing the value of the leased asset. Part of it is the economic usable value and part of it is residual value. Part of the residual value is guaranteed for rupees 10,000. The balance of residual value is unguaranteed. Lease rentals upon discounting the values, we get the present values. Let's make the entries. Net investment in lease credited by 1 lakh. Lease receivables debited by rupees 1,22,037. Unearned finance income credited by 22,037. Let's compare the entries in different situations. We shall make a summary of the accounting entry the lessor makes at the start of the lease. In this part video, we have learnt the accounting entries for finance lease in the books of lessor at the start of the lease. In the next part video, we will look at the entries during the lease and at the end of the lease.